And stick around until after I review this article, because that's when I'm going to tell you what I think is a better solution. Is the bank of mom and dad about to go bankrupt? This is going to be a quick off-script video for you today, just to go over an article that I saw that I thought was very, very interesting, because this is a trend that I have seen increasing over the years, and this article backs it up. And it has to do with the spending habits of Canadians and the fact that, well, so many of us don't appear to be saving for retirement, and obviously now with the cost of goods going up and inflation running wild, the situation isn't going to get any better. And I'm going to talk about that in today's video. But of course, first, I would love to ask you to subscribe to the channel if you would like to stay up to date on Canadian real estate. And if you could, please do me a favor and click the like button for the YouTube algorithm. That is the best way you can help me get this information out to other people who hopefully start taking saving and spending less money seriously. So thank you so much for that. And in return, here's a video of me getting kicked in the nuts by one of my kids. A lot of people are starting to turn to what they call reverse mortgages. Now, I'm not a mortgage broker. I'm not a mortgage specialist. If you would like to talk to somebody about a reverse mortgage, my recommendation is that you do an application with Citywide Mortgage Services, and well, they can guide you in the right direction. However, the basic gist of a reverse mortgage is the fact that, well, you probably don't have enough to live off of, but you do have a lot of home equity. So what people want to do is draw off of that home equity and then not have to pay it back until, well, maybe they sell their home. But the idea is that you get to stay in your home, so it may even be paid from your estate.
That means when you're gone.
Now, not having any personal experience with them myself, my understanding is you can do a couple of things with a reverse mortgage. One is you can take out a lump sum and just have access to that money immediately. Or two, you can actually have a proper reverse mortgage, meaning that you get a paycheck from the company of which you're selling your equity to into your bank account every, 2 weeks or month. And then the overall idea is hopefully no matter how much you pull out of your home does continue to grow in value while you stay in it. So ideally, when you pay off this loan, it's not as big a portion of your equity as the day you sign the paperwork. And stick around until after I review this article, because that's when I'm going to tell you what I think is a better solution. Because if you watch this channel regularly, you know that I am not a big fan of debt or giving away the equity in my property. So let's hop in here to the article, and this is from Yahoo Finance. It says, more Canadians turning to reverse mortgages amid savings crunch. Now, this is the part that gets quoted a little bit later on, but people are living longer. They haven't saved enough. That's probably the key. And now inflation has made the cost of everything more expensive. Now, you know me, I would say they haven't saved enough and they're probably spending too much is being the main cause. But let's dive in a little further. It says an increasing number of Canadians appear to be tapping into their home for extra cash. Home Equity Bank reported on Wednesday that reverse mortgage originations, not an easy word to say, topped the $1 billion mark in 2022. For the second year in a row. The interest in reverse mortgages is growing as more people look for options to finance their retirement. That is the key. This is for people that are retiring or older in age, not for somebody that is still working. And they recognize that their home can be a part of their retirement plan. And this is probably the big key, both to stay in the home that they love and also meet their financial needs. This is always something that I find is somebody that wants to stay in their home and is very connected to their home. Personally, I view homes not so much as homes that I want to stay in forever and be connected to. Rather, I do think that we all have periods of time of which we need bigger and smaller homes. So again, I'm going to get to it at the end of what I think is a better solution to this problem, but let's keep going. Then they say the quote at the beginning again, people are living longer, they haven't saved enough, which is number one. People are not saving 10% or more of their income, and now inflation is eating away at whatever they have left. A reverse mortgage allows homeowners who are 55 years, here's the key, 55 years and older to access up to 55% of their home's value. This is the key. You're not taking out the overwhelming majority. You can take out the majority of its value currently, but you're not stripping this down and pulling out like 80% value. And then, as I alluded to early, they can receive that money through a lump sum or installments, or hey, even a combination of both. And that's probably the part that I would worry about the most, is the lump sum or the combination of both, because what a lot of people do is they access that money and then they go spend it on a depreciating asset, like, I don't know, for instance, a car. And then, as I mentioned, loan value and interest is repaid when the home is sold, or unfortunately when the homeowner dies. 2019, it appears that there were 820 million new loans given out this way. In 2020, 830, and in 2021 and 2022, both years, $1 billion was accessed through this means. Of course, their sales pitch is that you can then age in place. This does help you. If that is your main concern, I guess I can't blame you too much if you do want to stay in your home. But if that is your main concern, and passing money down to generations when you indeed do pass on, well, if that's not your priority and staying in your current home, this could be a very viable solution for a lot of people. However, here's the catch, and they also start off with, however, they come with a high borrowing cost of 7 to 10%. And I wouldn't be shocked right now if they're even higher than that. That is a very expensive way to borrow money. And this mortgage specialist says, obviously, reverse mortgages devour home equity at today's rates. Basically saying that maybe previously, when interest rates were lower, this could have been a very good option. But now that the interest rates are increasing, well, it's going to eat up a lot more of that equity a lot quicker, not on the amount that was taken out of the loan, but likely the interest that's going to be paid on it in the future. And maybe the article will tell me, but I don't know currently if these are fixed rate mortgages or if they are indeed variable. If they are indeed variable, well, that could put a lot of people in a way worse situation, especially now that rates have gone up and they may have taken out those loans ages ago at a much lower rate, not expecting them to go up. And then this is the part I like. He suggests that seniors take a look at alternatives, but acknowledge that many don't have the choice to do this, meaning that they can then not get approved for lower cost financing. They obviously don't want to bring a renter in to live with them if you're a senior. I don't blame you for that at all. They have no other assets to sell. So these are becoming extremely popular. Look, it says Home Equity's reverse mortgage portfolio is the biggest of the two banks that do it, Equitable Bank and Home Equity, at $6 billion currently. And then they go on to some other possible solutions, like, for instance, HELOCs, which I don't think, now you can borrow maybe 75. I think they may have reduced it down to like 65% loan to value right now on HELOCs. But I don't think HELOCs are a very good solution either. If you don't know what a HELOC is, that is a home equity line of credit. And that is a number that can just continue to rack up over time if you have a home equity line of credit with a bank like Manulife or with other institutions. You may also have to make payments each and every month. So that's why they don't fix this solution for people on some sort of fixed retirement budget. But of course, I promise to offer you a better solution, and a lot of people aren't going to like this one. But this is my opinion, and this is what I think is the much smarter move. Let's say, for instance, you own a detached home and you've lived there for many, many years. Let's say you bought it in the 80s for $70,000 and currently that home is still worth $1.2 million. You would be way better off, if you don't owe anything on that property, to sell that property and downsize. People don't like the term downsize, but financially, this is a much better move. And let's face it, as you move on in life, you can likely take care of less property effectively as you get older. So downsizing into either a townhouse or hopefully even a 2-bedroom and den apartment would be a much wiser move. For instance, in my marketplace, if you sold that detached house for $1.2 million and downsized into what I would consider to be a luxury condo at, I don't know, $750,000, and that would get you a lot of space and a really, really nice unit. Well, now you can take, after expenses, maybe $400,000 and live off that for a number of years. And yes, let's say you've already done a downsize into maybe a townhouse when you retired, and now you're getting on in age again. Well, that downsize can continue. There are a lot of people that are on in years that do have to get into small two-bedroom or even one-bedroom apartments because it is very likely, and this is going to increase the more we get into, for instance, companies that don't pay pensions anymore, people not saving for retirement. There's a very, very good chance that your retirement is going to be funded by the real estate that you purchased many, many years ago. And if you're finding yourself in this situation and you don't think a reverse mortgage is right for you, well, you can book a call with me right now down below using the link in the description. Thank you so much for subscribing. Please remember to click the like button, and we'll see you in a couple of days.